Hey guys, Sarah Berry, CPA Texarkana, Texas here. Today is Tuesday, June the 9th, and I'm going to talk to you guys briefly about the bill that passed last week. It is HR7010 and made some changes to the PPP forgiveness calculations. So this is a bill that I'm excited to be talking to you guys about. It's going to be very beneficial to a lot of you guys. I wish they would have passed it about 2 months ago. That had been very helpful in all of our planning and crunching numbers and calculations and projections and revised projections and such like, but better late than never, right? So I want to briefly go over what's in this bill and give you guys some advice on how to approach this going forward. So let me take a step back and let's talk about the 3 tests to getting your PPP funds forgiven. So your first test is, did you use it? Remember when we applied for the PPP, it was based upon your 2019 payroll. It was 2.5 months of your 2019 payroll. But they gave you 2 months, 8 weeks to spend it in. So it kind of put us in a situation where if your payroll was down, then we were panicking to be able to spend all that money in that 2-month period. Well, this bill fixed that and said, yeah, we gave you 2.5 months of 2019 payroll, but we're going to give you 6 months or 24 weeks to spend that if you want to. So you have the option of using 8 weeks or 24 weeks. Question pops up and says, is it any given 8-week period or is it the original 8-week period? Well, that remains to be seen. I'm curious to see how SBA is going to interpret that. But my guess is it's going to be your original 8-week period, 8-week covered period, or your 8-week alternate payroll covered period, which we've talked about in previous videos. So I think it's going to be that 8 weeks or 24 weeks. I don't think you're going to get to choose an 8-week period out of the 24, but it's possible SBA could come in. That would be another positive interpretation if they did that. So that's using the funds. That's the first test of forgiveness. The second test of forgiveness is the salary reduction, which we were all really scared about that at first. Well, if I'm reducing hours, then I'm reducing salary and I'm going to get in trouble. But we have gotten additional clarification that says the salary reduction is if you reduce someone's wage rate or salary rate, not necessarily their hours. I don't know of a single business owner that has reduced anyone's rate during this time. If anything, they have increased them for hazard pay. So that rule really doesn't affect us either now. So the third rule to the PPP forgiveness is maintaining the same number of employees, FTEs. Unfortunately, that's an acronym that many of you guys have become very familiar with in the last few weeks. FTEs, full-time equivalent employees. So, you know, we had to look at these 2 look-back periods, and we chose the lower one, and we said, okay, we have to maintain that average number of FTEs during our 8-week covered period. Now, there were a few exceptions they come out with prior to this bill, but this bill has several more exceptions. And so I'm going to go through what I've compiled as a comprehensive list of FTE exemptions. So if you're not able to maintain the same number of FTEs, there are lots of reasons there that you're still not going to get penalized. You'll get the loan forgiven. Okay, let's talk about that. One of the biggest one in this bill, and let me just switch over here and we'll go straight to the bill. It says exemption based upon employee availability. So if you are able to document an inability to rehire individuals who were your employees as of 2/15, okay, you tried to rehire them and you can't. This one is very important. It's the inability to hire similarly qualified employees for unfilled positions. So if someone quit, you laid them off, you fired them with cause, and you can't find similarly qualified employees. I'm having a lot of clients in the retail and food industry. They're having a hard time finding employees that want to come work these hours, wear masks, these additional sanitation requirements and things like that. They're just having a hard time getting these employees in and keeping them, and it's been an extreme level of stress to get that number of FTEs where they need to be so they don't have to pay all this money back to the government. So this is very important. And another one here, if the employer is able to document an inability to return to the same level of business activity that they were operating on February the 15th due to the Health and Human Services, the CDC, related to the maintenance of standards for sanitation, social distancing, and other worker or customer safety requirements. So if your hours have changed, your dining room has less available seating because you're having to leave every other table open up, if you can't return to business as normal, you document it. You don't have to have your FTEs at the same level. So for all intensive purposes, I really feel like the FTEs is not a big deal anymore. I think there's so many exceptions. I think we'll be able to get around it. So let's go through this list that I have here. Business didn't return to the previous level. You can't rehire the same employees. You can't find similarly qualified employees. You've offered to rehire your previous employees, but they don't want to come back. You fired them with cause. They voluntarily resigned or requested less hours. So if you have employees that fall into this category, you're not going to get penalized. So now that the 8 weeks is over and you've killed yourself tracking FTEs, take a deep breath. You didn't have to do it anyway. So gotta love the government. So here's our 3 tests. You spent the money. We now have 6 months to do that. Salary reduction, I don't think that applies to anyone. If you didn't reduce anybody's pay rate, you're good. Tracking FTEs. As we've gone through it, that's not that big of a deal anymore. So take a deep breath. I think we're all going to be okay. Let me run through a few more things here, then I'm going to give you some advice from myself, okay? All right. So in this spiel, okay, so you guys know in the original CARE spiel, this wasn't in there, that says that you had to spend 75% on payroll and at least 75% on payroll and only 25% on non-payroll costs. But SBA and Treasury Department decided it was in their best interest to put that 75-25 rule in there. Well, this law come from Congress that they just passed last week and said that you can actually use 40% on non-payroll cost and 60% on payroll cost. So what that means, this is really going to help the businesses that are not able to open up completely, so they haven't put everyone back on payroll. They can spend 40% of their loan to cover rent and utilities to hopefully help them survive this on the backside of it, to open up their business. Okay, so the safe harbor provision, that was if you had your FTEs up to the pre-coronavirus levels by 6/30, now that's 12/31, so they scooted that out 6 months. If you get a PPP loan after June the 5th, then your loan, if you don't get it forgiven, it becomes a 5-year loan instead of a 2-year loan. Now, it remains to be seen whether SBA is going to say, if you received a PPP before June 5th, because most of you guys did get your PPP before June 5th. If you got it before June 5th and it's not forgiven, I think it's still going to be a 2-year note instead of 5. But honestly, I don't see any reason why any of these PPPs should not be forgiven now, because they have relaxed these rules so much. Thank the Lord. Now we have 10 months after the end of our cover period to apply for forgiveness. So we did have, I think it was 60 days or something like that. Also, I want to touch briefly on something and then tell you don't do it. So this bill says that you can delay payments of payroll taxes in addition to the PPP. So you can, but don't do it. I've seen so many small businesses get in a financial bind and dig themselves into a hole from withholding payroll taxes and not paying those payroll taxes in. If you can't afford to pay payroll taxes, you don't need to be making payroll, okay? If you're giving this PPP money from the federal government, you better be able to pay payroll taxes. If not, then you may need to shut your doors. We need to have a serious consultation. So, yes, that's in there. I've had some questions about that. Just want to say that, but do not do it. Continue to pay your payroll taxes as normal. Okay, so SBA Joint Statement. Let me pull that up real quick. They just released this yesterday. It's a joint statement with SBA and the Treasury Department. And they said the SBA, in consultation with Treasury, will promptly issue rules and guidance and a modified borrower application form. SBA doesn't really do anything promptly, but hopefully they're going to come back and give us an updated, simplified application for forgiveness that we can apply with the banks. They said in here that we can, borrowers who have already received the PPP loans retain the option to use an 8-week cover period. So this implies that it might not be the original, but you could maybe pick an 8-week period. Again, SBA could completely interpret this bill differently. We really don't know at this point. I'm not going to dive off of it. We've talked about the 75-25 change into 60-40. We've talked about the FTE calculations. Just as a note, if you don't spend 60% on payroll, at first they said it was a cliff, and if you didn't spend 60% of your PPP on payroll, then you wouldn't get any of it forgiven, but they're clarifying in this that it's not necessarily a cliff. Okay, so let's talk about some advice that I have for you guys. Like we talked about, your PPP was based on your 2019 payroll, 2.5 months of your 2019 payroll, and they gave us 2 months to spend it in. If you didn't have large rent and utilities, if you had a lot of employees over $100,000, things like that, then we come right out of the bat saying, guys, you may have to issue bonuses to spend all this money, not have to pay it back. Not applicable anymore. It's bad advice. Not because we did a bad job, but because the federal government keeps changing the rules, okay? So my advice right now, do not issue bonuses if you're doing it strictly to use the PPP funds, okay? If you feel like you need to issue bonuses just to use those PPP funds, reach out to us and let's talk about it. You can stretch it out over 6 months now and you should have no problem spending that money at this point. Now, a lot of you guys have been planning on the 8-week cover period, and we pushed toward it. We've got more people back on payroll because that's what we thought we had to do. So at the end of the 8-week cover period, we've spent the money and we're ready to apply for forgiveness. So my advice is if you've spent the money during the 8-week cover period, then as soon as we get those modified applications for forgiveness, let's get those things filled out into the banks. Now, I don't know when the banks are going to start accepting it. I'll keep you guys posted on the local banks here in Texarkana when they start accepting it and when SBA does. But I know the banks are going to be so ready to get these loans off their books. You guys are ready to get these loans off their books. I'm ready to help you. It's like a cloud hanging over my head. Ready to get all this debt gone and truly get it forgiven. As a side note, remember that our last guidance from the IRS says this forgiven loan is taxable income. Now, Congress has said that it's not going to be taxable income. They want the IRS to reissue a different statement. They may have to pass a law. Why they didn't put it into this bill, I don't know. But as of right now, a forgiven PPP loan is income to you. So we'll know more when we're doing our fall tax planning sessions on that. If you're doing a weekly payroll, you can do the alternate covered payroll period and make sure you get 9 payrolls in an 8-week period. So 9 weekly checks in an 8-week period. If you're doing these bi-weekly, so if you pay payroll every 2 weeks, you should be able to get 5 payrolls in there instead of 4 if you structure your payroll period correctly. So there's no problem in using that 8-week period. Again, my advice, if you spend it in the 8 weeks or you're close to spending the 8 weeks, let's get it over with. Let's get it off the books instead of spreading it out to 6 months. Now, if you've got, I've got some clients with $100,000 in bonuses need to be issued. They need to spread it out over the full 6 months in order to spend it all. They have no other option. That's fine. We're going to do that. We should be expecting a simplified application really soon. When I see it, I will share it with you guys. So that is all that I have for you today. Thanks so much. Bye.